Hello and good afternoon, everybody. Welcome to our midday market update for March the 2nd of 2017. It's Thursday. This is George Papazov, president, owner here, founder, head trader, wear a lot of hats at Trade Pro Academy. Been trading since 2001, been running Trade Pro since 2012. Our goal is to empower the individual trader, the individual retail investor to have level playing field with the professionals. My goal is to help teach you how to trade the market profitably. Not in the 80s, not in the 90s, not in the 2000s, in today's decade, in this year, in today's date, in this hour, in this minute. And there's different tools. I'm continuously changing and innovating for our group here. I'm showing them what is required to be profitable, and I want to do the same for you. Before we start with today's update, I'll give you a quick agenda of what we're talking about today. Number one thing is, should you buy Snapchat, now called Snap, mysteriously? I don't know why they took the chat out. I guess they don't want people to chat. They just want to snap. Should you buy the company at IPO today? I'll give you all the stats. And then second thing we're going to talk about, this market run up, what's happening and what's taking shape. What can we expect to happen? Is this sell off for real, or is this dip going to get bought in, or we're going to close at record highs again tonight? So those are the two things we're going to mainly focus on. We're going to look at some correlatory assets and some news, and then we'll send you off for the rest of the week. The next midday market update will happen on Monday. All right, but before we get there, I want to tell you something. If you're hearing me today, you're in the prime opportunity to get something, to get a massive and exclusive benefit at the end of March. We're going through some changes, and I want you guys to be part of it. What's going to end up happening is you're going to get one of the best deals you could ever have on Trade Pro Academy. The pricing is changing. We're adding more products, and if you want to get it at a grandfathered price with all the new services, with all the innovation, be part of the trading group, see our live trading floor, see our analysis, get our courses, all of that in one bundle for a price you'll never pay again. I want you guys to sign up for our mailing list, and I'll keep you posted leading up to the launch. We have massive changes, and I want you to be able to participate. After this date, I can't do anything. The way the technology is set up, I can't grandfather after the day. Once the switch is enabled, new members have to pay new price. Existing ones get grandfathered in. So I want you guys to be part of it. Sign up, tradeproacademy.com/free trial. I'll also send you 3 of my secret and favorite indicators on what I use to trade and make money with on a daily basis. Let's get started, all right? Let's look at Snapchat first and foremost. I'm going to bring up the chart here and walk you through what's happened on Snapchat. Today was their IPO, their initial public offering. An IPO basically means a company gets moved from private ownership and it has become public. All right, first and foremost thing, you as a shareholder owning Snapchat, if you own all of the shares on the market, how many votes do you think you get in the direction of the company? 0. This is how this company is different. Google's done it, but Google is a company that's been around forever. You get 0 shares. None of the shares that you own give you controlling interest in the company. Your vote counts for nothing. Just give them your money and don't vote and be quiet. Zip it. All right, pay us and zip it. That's the idea behind it. That's the first thing you have to know about Snapchat. If you care about shareholder activists and that kind of stuff, it doesn't matter. No amount of shares will be able to overthrow the 2 co-founders. That's a tech stock. It's typical. It's very publicized. It's very excitable. Everyone's going nuts about it. I'm going to tell you something. Be very careful buying Snap. Let's pull it up. The ticker symbol is SNAP. All right, it IPO'd today. Clearly, there's only 1 day of price action on a daily chart, but if we go to a 5-minute, you'll see some of the madness. If you go to a 1-minute, okay, the stock IPOs opens at $24. Initially has a drive down to about $23.50, and the thing just blasts higher to $25. So the stock's up about 40%. Its IPO price was supposed to be $17, right? The way IPOs, do you know what IPO stands for? Initial public offering. Do you know what it really stands for? It's probably overpriced. That's what IPO stands for. This is the thing that I want to tell you. Whether you should buy Snapchat or not, I can't answer that for you, okay? But if your only reason for buying Snapchat is because you feel like you're going to miss out on a great opportunity, do not do it. The fear of missing out is not a place that you want to invest on. It's not a space you want to be an investor based on. Here's another thing I'm going to tell you. If you've never used Snapchat and you don't know what it is, and if you just know that your 20-year-old or your teenager is saying, hey, I'm going to snap some stuff, and that's the only thing you know about it, don't buy it. All right, do your research, because for the long term, Snapchat's perspective and opportunities, I don't know where it'll be. Who knows? It might be the next Google. But what I could tell you is they have no revenue. Okay, they're losing money like every other tech stock company. This company started by sending nude pictures to people. I'm not kidding you. I wish I was. sending nude pictures to one another, and the premise was that they would disappear within 10 seconds. So you want to send a nude selfie, there's a way to do it. You Snapchat it to somebody. That's how it started. And then it was offered $1 billion for an acquisition from Facebook. Okay. What did Evan Spiegel say? And the founders, they said, no way, Facebook. Take your $1 billion and go away. Kudos to the kid. To turn down $1 billion at 21 or whatever he was, that's insane. Good for him. He had a drive. He had a passion. He believed in this product. However, I'll tell you this much. By the time a stock is available, an IPO into the public, it is not a great time for you to get in. It's a great exit strategy for the early investors of the company. But here's the thing. There's something called the lockup period that you need to know about. Most companies have 1, 3, 4 month lockups. Snapchat has a 1-year lockup, which it means all the executives and all the shareholders from early on cannot sell the company until 1 year has passed. They can't sell the stock. Why? Because obviously on the opening print here, a whole bunch of new young kids have just been minted, brand new, fresh millionaires and billionaires. Evan Spiegel is now the youngest billionaire, worth $5 billion as of the open of trading today, and increasing with every single tick higher. Now, they're waiting to exit. It's payday for them. They're ready to cash out. So if everyone cashed out, we would need enough buyers to sustain that. That's why they're locked out until 1 year. They can't sell. So the first year of this company's history, yeah, I could see some upside. Should you buy it at 25, 24? I think it's just hype. Be very careful. Be very, very careful buying into hype, because I know how these things end. And you look at IPOs and you say, yeah, well, what about Google? You know what Google IPO'd at? Yes, thank you very much. I do know what IPO'd at, and I know what it's trading at today. However, look at some other companies that IPO'd. LinkedIn, all right, just bought by Microsoft, so you actually can't pull it up anymore. Well, you can, but 195, where did they IPO a long time ago? At about 80. What happened? It popped a little bit and then got floored for a couple months and then took off to the upside. Okay, let's look at another company, Twitter. All right, where did it IPO? 44 bucks, and it never really traded. It popped initially, got slammed, and down it goes. That's what happens. Retail gets excited. They call their brokers. They buy, and they realize, oh, crap, I think we bought the record high, and the thing just gets slammed lower. Be super careful. Don't just buy it because it's a cool thing to do, and you can go to a dinner date and say, I own Snap. Hey, what's your name? I own Snap. That's not a good reason to buy it or for missing out. Just be careful, all right? That's all I'm telling you. Follow it. Be careful. There's a ton of volume going through on it. I would say Snap right now is not a buy. It is not. I'm staying away from it. Okay, I like to see how a company trades a little bit. It's prospects. It's not a revenue generator. They literally make nothing. Yeah, they're going to make some glasses apparently that you could wear. Super creepy. Google tried the Google Glass idea. It didn't work. Tons of privacy concerns. All right. I don't know about the prospects as a company, but good for the kid. Evan Spiegel, 24 years old, the youngest billionaire. All right, with a grand total of $5 billion. Kudos. They're popping champagne at head office. I guarantee that much. All right, let's look at markets. Enough on Snap. Let's go into equity markets. Any questions on Snap, by the way, guys? Comments, concerns, emotional breakdowns? Yeah, our one of our members here says 116 million traded already today. That's a lot. That's a lot of volume. Remember, Snap is exposed to a lot of institutional buying as well. A lot of funds have subscribed to that IPO. It was oversubscribed by a 10 factor, which means for every one share that was available, 10 shares were wanted to be bought on the institutional side. I remember working in the brokerage business, and we have clients saying, oh, how do I get my hands on this Facebook IPO or whatever it was back in the day? And it's like, I have 5,000, I want to buy it. There's no chance you're getting it pre-IPO with that amount. You got to be an institution. You got to be subscribing to millions of dollars at a time, not just a couple shares. So what I'm saying here is oversubscribe to a 10 factor. It's natural. The hype pushes it up, but be very careful. All right, be super careful trading this thing. I got a bad feeling. Okay, let's go to S&P 500. Yesterday, I had a stat, 3/4 of the buying volume was driven by a short squeeze. Okay, what does that mean? It means that yesterday, despite having some high buy volume, 75% of the buying was from shorts entering into this market, getting squeezed out. And you might say, well, George, how is that possible when the short selling in the last couple of days was only about 10 to 20 points? All right, and this is what I'll say to you. I'll say to you it's possible because shorts accumulate, all right? And when the price is not moving, no one's nervous and desperate. When the price blows up to the upside, okay, like this, what ends up happening? Shorts get more nervous and they start chasing and buying and higher prices. And oh my God, it's going to get away from us. And they keep chasing it higher, and their buy stops are what made it go up. All right. That's a capitulation move. I can also tell you this: in my 14 years of trading history, a buy stop run to a new all-time high on a massive move like that is usually bearish. More times than not, it's bearish. That move gets faded. We'll try the high again. We'll fail, and we could potentially head lower. But again, it's a strong up market, and anyone fading this thing is getting, if you're not making small profits quick, you're getting bled out in the long term. It's one thing to fade a trend. It's another thing to short. Okay, professional traders, floor traders, the guys who's trading the pits made their living off of fade trades. Short sellers, guys that hold and say, I know it's going to go down. Who are you to say it's going to go down when the thing's just ripping like that? All right, there's a good chance one time you'll be right up there and it'll drop, but by that time, you would have lost your whole account. And that's the way it always works. Guarantee you'll lose your last penny at the top trying to short, and then it'll go down. Why? Well, because once you're gone, who's buying it anymore? Nobody. Shorts are forced to cover, chasing the price higher. It's a dynamic of the markets a lot of traders miss. All right, S&P is coming off a little bit. I'll tell you where the support will be. 2380 is where you're looking at on the ES futures S&P 500. Here's some floor levels for you. 89 evens, which we've already tested. Those are off the map. 85s we've tested. I took a trade off that already today. 80, 75s is the next downside level, and 70. Floor pivot is 93 on today's session on the S&P 500 futures. 93. Okay, we'll look at futures in a second. S&P 500 is coming off a little bit. Oil is just getting absolutely creamed. Gold's dying. Why? Because the dollar is rallying higher. Why is the dollar rallying higher? If you don't know that, you've got to follow the markets a little bit more closely. The reason the dollar is rallying is the Fed is hawkish. All right, today CNBC interviewed, can't even speak today, interviewed one of the Fed speakers. I'll tell you who it was. Just trying to scroll through. A lot of news actually today hit. Just going through the wire, a ton of stuff. Anyways, one of the Fed speakers said, Fed's Powell, moderate voter. He's a voter. He's moderate stance. Said rate hike in March is on the table for discussion. We're certainly getting very close to 2% inflation goal. Everyone in the Fed has said they're going to hike rates, and March is a live meeting. Over 90% chance now are the implied odds of a rate hike on March 15th in under 2 weeks. So if a rate hike is coming in under 2 weeks, that's not going to help equities. That's not bullish for equities. It's bullish the dollar. The dollar goes higher, all right, and it puts downside pressure on crude oil, on gold, on any other commodity-driven asset, okay? Today, bonds and equities are getting creamed, which is an interesting correlation, all right? Watch that dollar. If you don't know that the dollar is driving the market, now you do. Watch the US dollar. Fixate on it. DXY on TradingView.com. Free chart. It's a dollar index futures. All right, let's head forward and look at some other analysis on the equity market. You could see pretty much equities across the board are selling off. Dow is a little bit more excited than anything else. No, it's end of day. Forget that. I have to sign into my CQG down here, and I'm not going to do it on a broadcast. You got to put in your username and password. Dow's down also. You could see S&P, that's live data. It's down. NASDAQ's down a little bit. Russell's coming off. And the one divergence I've been pointing guys to, and ladies as well over this time, is as these equity markets have ripped, Russell hasn't really enjoyed the same rate of appreciation, and that's a warning sign to me. It broke out. It's consolidating, hasn't moved higher, and eventually Russell was either going to pop or it's going to drop off and pull everything down with it. And you could see what it's starting to look like today. All right. Before you start getting too excited and shorting this thing in massive size, I'm going to tell you something. This is how this market works. And if you don't know this, you will now. I'm going to go to ES1 exclamation. That's the future symbol, the S&P 500 index. I can go a 5-minute chart. I'm going to show you some stuff here. All right. We opened into the 9:30 session. We start to get weak. We consolidated a little bit. I caught some of the short, and then I got this long, and now I'm out of that trade. So I'm flat. But you could see lower lows, lower highs, volume increases on drops, volume decreases on rallies. Starting to drop, volume starting to increase again. Watch this. I think we got more downside for the day. Here's your trading plan. Look for entries to get short. Find some good levels. Join our trading room if you want me to provide them for you. But look for good levels to get short. And what you want to do here is ride this thing to about 2:30 p.m. Eastern if you're on the day trading front. If you're a swing trader, then you need a different strategy. But keep shorting this thing to about 2:30 p.m. Eastern, then reverse and start buying those dips. I think today we close them back up into the 90s. I think we take them 75-ish and good potential to stronger arm our way back to the 90s. Remember, bull markets open weak and close strong. Don't write this thing off yet. All right, because what's happening here is volume is increasing on the downside, shorts are entering. What does that mean once again? It means a squeeze could come out right at the end of the day. We finish this thing as a doji and we end up putting in a candle like this right up top. Imagine that. So be careful. What I'm not saying here, get short and stay short. I'm saying ride the trend, look for opportunities. In today's day and age, it's really hard to swing trade successfully because there's a lot of sideways action. Using options to swing trade, that's all but dead because theta is burning. Right? Your time value is depreciating. When your time value is depreciating, there's guys like me that are selling you options that are happy. All right. Dollar index, ripping higher, oil weaker. Gold's a lot weaker. We were trying to short these 60s. I've been kind of squawking the bell here on this thing for days. Go back and watch our midday update 3 days ago and see what I told you about gold. I'm not going to repeat it. I'm going to tell you this. Seasonality is coming in to a top. I said I'd much rather be short the metal right now than trying to find opportunities to get long. And there it was. I just fell out. This red zone here is where I was looking to short. And I painted that red zone down here. Here's the question. Everyone wants a forecast. Where will things go? It doesn't matter where it's going to go. What matters is, are you on board? Where will you get on board? Will you buy? Where will you sell? That's what you're trying to answer as a trader. You're not trying to answer where it's going to go, because I can tell you it's going to go to 1340. And I can tell you it's going to go there in 3 weeks. And I could be 100% right, and you could lose your entire account balance. Agreed? Because the path up won't happen the way you expect it to. It happens the least way that you expect, and that's why traders lose money. So what I'm saying here is watch this downside. Gold's getting hit hard on the back of a strong dollar. The trend is strong dollar, weak equity, weak bonds, weak metals, weak energy sector. Everything's getting creamed. We're on a reversal trade here. Let's see. What does the red bars on the bottom of the gold chart mean? Hart, stop having such a keen eye. Jeez, you don't miss a thing, do you? Just kidding. That's good. It's a good question. These are basically, no, it's commitment to traders report. So it's COT, commercial index. This is basically the guys that are hedging. So the commercial side tends to hedge or sell a lot of contracts at record highs. Why is that? Because the more that we go up, the more the commercial side wants to protect their exposure. Commercial means they're not in the business to speculate. They're in the business of gold, and they want to hedge themselves. So you could see anytime where we get a rally and commercial starts to expand on the short side, usually because everyone's shorting for protection, they'll start to be right and market will drop. So it's a negative on oil while traders are record long, correct? Let's look at oil. That's a good question, Hart. Let's see, CL1 exclamation. Futures, here you go. So what's happening here is we are long, net record long on oil. There's a lot of contract traders that are long. Oil is a tricky market right now for two reasons. One is we're coming into a period where OPEC and non-OPEC are going to have to renegotiate their agreement that expires in June. That's going to start to drive some volatility. But yes, they're opening net shorts. As price goes up and up and up, there's more shorts opening because they're saying, hey, oil's not going higher and I'm producing it. Let's say you're spitting it out of the well and you're saying it's 53. My production costs are $40 a barrel and it's trading at 53. Well, I'm making $13 margin now, but if it starts to drop, that margin is going to get squeezed. So what do? Maybe take some of your cash, short the futures contract, and now lock in this $13 margin. And for that, maybe you pay $2. Does that make sense? You paid $2 to hedge the oil contract. So instead of making a $13 margin, you're making $11, but you're guaranteed to make the 11 for as long as you're hedged. That's why commercials tend to hedge into strength. That's how you read that. I hope that answered your question. Did it? Does it help you? All right, that's what I got for you guys, for YouTube. Trade Pro members, hang tight. I want to show you some levels for the afternoon. I think there's a great opportunity coming up in ES. Oil just puking. Wow, what a puke. But there's some great opportunities coming up. I want to share that with you. YouTube, once again, I want to invite you to come out and join us. You can get a 2-week free trial. If you go to Earn Package subscription, that's your 2-week free trial. The Earn Package allows you to join the trading room live. We trade from 9 a.m. to 4 p.m. daily, show all of our trades, all of our analysis. It's a great group of people. In addition to that, we have one of the best futures course training archives. You won't find this type of stuff anywhere. Do you know why? Because it works. Because I'm using it to make money, and that's why you're not going to find it online as easily. We got hands down the best futures training course, and I want you guys to check it out. TradeProAcademy.com/free trial. All right, it's one of the best courses, and for 2 weeks free trial, you can't go wrong. And get on the list before we have the grand relaunch on the end of March. So I promise you, at the end of March, you're going to be saying, wow, I should have signed up before. It's that much of a difference. You're going to get a lot more service for a grandfathered-in price. Think about that. All right, guys, have a great afternoon. Be careful on this thing. So far, the downside's the right side, but we're starting to bottom out. I think in the afternoon, we're going to try to make a push higher to close these things back into where the open price was, so around these 90s. All right, trade well, trade careful. Remember what trends are intact. One thing you need to watch out for, 1 p.m. on Friday. What's happening? Janet Yellen is speaking. The market is fixating on that. And then March 15th is the meeting where a rate hike is expected. Take care. Have a great afternoon. If you have any questions, email me or just sign up. Check out our service, 2 weeks free trial, TradeProAcademy.com/free trial. Can't speak anymore, so it's a good time to bid you farewell. And I'll see you on Monday's update for some more stock analysis. Take care and all the best. Trade Pros, give me 1 second. Let me end the YouTube broadcast.